A very warm welcome to all of you. I am Deepthi, your host for tonight's webinar. Now, before I begin, let me just give you a brief that this webinar is only for information and knowledge purpose. And the motive is only to educate the industry on various perspectives of the US-China trade pertaining to the textiles and apparel sector. Let us go on with what will be the agenda for the webinar tonight. So we will begin with a little introduction about how the US-China trade war is off currently. What is the current situation of its impact on the textiles and apparel industry? What is the kind of expected impact on US and China? How to move out of it? And who will be the global benefiters out of this US-China trade war? The last section, we would present an outlook of how both of these countries are going to take advantage of this trade war. Now, we all know that the US and China have been locked in a bitter trade battle since early 2018. And since the last 1 year, both of these economies have imposed tariffs on each other's goods, which have impacted not the economies of US, China only, but global economies on a whole. The basic reason that US has attributed to the beginning of this trade war is China's unfair trading practices and intellectual property theft, while China has raised concern that US has come up with this trade war, citing that China is rising as an economic power. If I look at today's situation, negotiations look difficult between both the economies, and overall, the uncertainty is hurting global businesses, and we have a lot of international economists who are also pointing out at a global recession coming in the next year. Here, we will analyze the impact of the US-China trade war specifically on the textiles and apparel sector. So, the table that you see in front of you gives you United States import statistics for the last 3 years. Now, if you see the top 3 exporters to United States for textiles are China, India, and Canada, with their respective share percentage in 2016, 17, and 18. If you clearly see China's percentage share has gone up between the years 2017 and 18. And if I count about the first 7 months of 2019, the percentage share is still significant. It is still the largest exporter of textiles to the United States. However, as compared to the percentage change that I compare between 2019 first 7 months vis-a-vis 2018, it shows a negative trend. But we have another 5 months to go to see the overall impact of Chinese export of textiles to the United States. Of course, the growth rate, which has been pointed out, is also significant at 5.2%. Other players that you see here, India, Canada, South Korea, and Turkey, have also have substantial growth rate barring Canada. But if you look at Turkey, it is growing at a substantial rate with respect to its export of textiles to the United States. Now, if we consider only the year 2019 and see how the month-on-month exports from China have taken place to the United States, you can clearly see that there is a negative CAGR of -2% between January to July. However, the percentage share is still the highest. Similarly, when we are talking about the most significant sector of exports from China to United States, the apparel sector, we see that when we are comparing the last 3 years, 16, 17, and 18, China has had substantial percentage share, including this year, the first 7 months. However, the CAGR growth rate has gone down, but there's a very, very minute change in that. The significant gainers out of this are Vietnam and Bangladesh. But when we are considering the total value of exports happening, Vietnam is less than half the proportion of China. Considering the month-on-month exports from January 2019 to July 2019, again, China's percentage share is significant along with the CAGR growth rate. Vietnam has also shown significant growth. However, Bangladesh as an exception is showing a negative CAGR for the first 7 months. Other important partners who are deriving this advantage of exporting apparel to the United States are, of course, India, Indonesia, Mexico, Honduras, Cambodia, Jordan, and El Salvador. Now, these include the South Asian economies, the Latin American countries, and few of the newer emerging Asian players like Cambodia and Myanmar. If I look at the overall effect on the global textile and apparel sector, it is significant that economic growth across the globe has slowed down because of the trade war. The foreign direct investments have also reduced. Not only has the trade war significantly impacted the US-China economies, but has also hurt the European economy, particularly Germany, even though Germany has good trade relations with both China and United States. Similar to US, Britain, Germany, Japan, and South Korea, all of them are showing weak manufacturing performance as of 2019. The general sentiments for American manufacturers are that they are reducing their capital investments and delaying hiring due to the uncertainty caused by the trade war, specifically in the textile and apparel sector. The advantage here that we see for South Asian countries is that it has given tremendous opportunities for competitors of China like Cambodia, Vietnam, Bangladesh to pick up their market share in the US market. Other beneficiaries apart from South Asia include Chile, Mexico, and Argentina. Now, when we are talking about the expected effect of the trade war for retailers and brands, we see that the new tariffs that would be levied on this sector would result in higher prices on those consumer goods listed for American shoppers. Now, surveys of consumer sentiment also point out the same thing, that they have shown a sharp decline because of the uncertainty caused by the trade war. However, as compared to the Western side, the Asian governments have instituted stimulus measures to address the damages coming in from the trade war. Now, interesting factor in this kind of trade war between China and US, specifically for the textile and apparel sector, is that in spite of China facing a higher tariff level, there are certain aspects of China that keep it the most wanted supplier. As we see, low-end clothing production is moving rapidly to Vietnam, Cambodia, and Bangladesh, but high-end goods are still made in China. Nobody can actually compete with the quantity and quality that China has to offer till date. Also, some of the emerging lower-cost African nations like Ethiopia and Kenya have witnessed slow but significant production volume gains in the past 7 months. Another significant factor that is important for the textile and apparel industry is that both the US and China are imposing tariffs on cotton. And the impact of this move is going to have a wider microeconomic impact on the industry, not only in the short term, but also on the long-term basis. Now, we have this specific section on expected impact on US and China. When I compare the effects of the trade war specific to textile and apparel sector for both the economies, it is clear that the impact is higher on the United States. Why? One, because high-end US fashion brand items are more reliant on China for manufacturing, and increasing a tariff on them would actually mean the American consumer paying more. So the cost will directly be passed on to the American consumer. US retailers are quickly moving their sourcing orders from China to other suppliers for basic fashion items. Like I mentioned in the previous slide, it is going to Vietnam, it is going to Cambodia, it is going to Bangladesh. But for more sophisticated product categories, there are very, very fewer and costlier alternates. So China still remains as one of the major suppliers for these particular product categories for high-end clothing. US clothing firms, major brands and retailers from US are continuously working on expediting the pace of shifting production facilities out of China, primarily to South Asian countries like Vietnam and Bangladesh, which are the most favored in terms of various kinds of parameters, which we'll study going forward. Also, a recent declaration by the National Retail Federation of the US have mentioned that the tariffs would result in US consumers paying another $4.4 billion on apparel and $2.5 billion on footwear. The most significant factor that can impact the United States is that Chinese consumers are very, very patriotic. And in case of such trade wars, if they put on a boycott on US goods, then the US will be significantly impacted, not only in terms of end consumers, but also in terms of production facilities which are in China. When we talk about China, yes, the plunging orders from US have depressed the price of raw materials also, including yarn. And there is clear oversupply of textiles in the market. So Chinese firms are also looking at relocating their manufacturing capacities across countries like Vietnam and Bangladesh, which they have also been doing for the past 5 to 8 years. And there is significant investment of China in Vietnam. Now, China is facing cost pressure, not just because of the tariff war, but also because of its labor and logistics cost. The most important factor that has impacted China is that they are devaluing the yuan to make its exports cheaper. Now, how this strategy would help them in the long run, I think that time will tell. But this is one thing that has significantly impacted the Chinese economy. Now, the best part that we want to study here, that who will be the global benefiters out of the US-China trade war. Now, these 5 countries are the major ones out of our study that I can point out would be the major benefiters out of the US-China trade war pertaining specifically to textiles and apparel sector. Now, when we are talking about textiles and apparel producing firms, what is important for them is that they require labor-intensive work, which makes sense to explore alternative destinations like Vietnam, Bangladesh, India. And because they have to consider factors like cost of relocation, access to suppliers, labor market, which includes what is the labor size, wages, what is the skill development stage, and supporting industries present in these countries, what is the logistics and infrastructure, what is the kind of tax structure and regulatory regimes, all those details. Now, we have the comparison of all these 5 countries on certain parameters. Now, when we are looking at the economic overview, if I look at abundant supply of labor, I can significantly point out 2 countries, Bangladesh and India. And in terms of commercial bank lending rate, the first factor comes down to Vietnam. Business index is another important parameter that helps brand and retailers re-strategize the locations where they want to continue their supply chains. Now, in terms of ease of doing business rank, now this ranking is coming out of the Global Competitiveness Ranking Report. So Vietnam is the highest in case of the countries that we are comparing. So Vietnam leads in this way. Bangladesh is way, way behind only because of the lack of infrastructure, facilities, and other regulatory regimes present in Bangladesh. When we look at labor market regulations, I think more or less all of these 5 countries are on the same line as to in terms of fixed term contracts, the standard work days, restrictions on weekly holiday. All of these are more or less on the same parameters. When we talk about wage structure, I think Bangladesh has a clear-cut advantage of close to $95 as the monthly income as compared to 152 in Vietnam, 180 in Cambodia. Myanmar is again has a limited wage structure, has a reasonable wage structure, but the kind of expertise in the textile apparel production and the scale is not feasible in Myanmar. Now, before I come to the advantages, let us evaluate who all are the countries that could have benefited out of it. Firstly, I think India's now another important factor that we see here is that India's export to China has grown faster than that to US post the trade war. And India has made modest gains as compared to Vietnam or Bangladesh. Similarly, as we say that in 2019, though India gained during first 5 months, the increase is much larger in terms of volume for Vietnam and Bangladesh. And India has significantly benefited by exporting more cotton to China rather than more apparels to US. Now, another segment which is expected to benefit out of the trade war is the carpet sector in India, which has a 35% global share as compared to China's 18%. And the only way India can increase its chances is by offering incentive to companies to enter the country. Only then I believe India can have a significant advantage to the US-China trade war in this scenario. When we talk about Sri Lanka, I think there is not much scope as trade of Sri Lanka with both US and China is at a low level as of now. When we are talking about other countries, of course, African nations like Ethiopia and Kenya are taking good advantage of this slow growth but significant volume gains. So I think in the next decade or so, they will have substantial shares of the pie in their accounts. The most significant beneficiary is definitely Vietnam, with massive outflow of production happening from China to Vietnam, not only today, but for the last 5 years. Now, another fact that is to be noted before we move on to the next slide is that bags, shoes, and lingerie, which are difficult to move out of China, is because of integrated infrastructure and skill set present in China. So the only part that will be moving out of China will be outerwear to Myanmar and Vietnam, sportswear and bottoms to Cambodia, and general flow of textiles and apparel to Bangladesh. Another factor that I like to point out here is that audit and inspection demand has gone up significantly in Vietnam, Indonesia, and Cambodia by 21, 25, and 15% just in the first half of 2019. So we assume that a lot of retailers and brands have been trying to go and explore these new regions and to understand their functionalities. Now, coming down to 2 major regions that we think are going to benefit the most out of Bangladesh. So the first country benefiting out of the China trade war is Bangladesh. Of course, I will point out the advantages. Now, China and United States have been stable trade partners to Bangladesh for decades. So that is one point that favors the relocation of factories and the volume of trade from US coming into Bangladesh. The volume and value of trade Bangladesh has had with both countries is significant. Of course, the nature of trade is different. So Bangladesh is an import partner for China while an export partner for United States. But ultimately, it is the one who will be benefiting. Bangladesh, as compared to Cambodia and Vietnam, is comparatively a more attractive destination for relocation. Of course, its abundance of labor gives it a competitive edge in this labor-intensive industry. And more importantly, because Bangladesh is the least developed country, it qualifies for a duty-free market access or reduced tariffs to many developing and developed markets. It enjoys duty-free access to around 52 countries, including US, Australia, Japan, China, and also has a preferential access to the EU. The only limitation that I would say Bangladesh has is that it's struggling with a crumbling infrastructure, a weak rule of law regime, and a poor business environment. So what it needs to do is to improve its supply chain, modernize its garment factories, build highways, and reduce the red tape happening at ports, only to lure more buyers coming in from the United States. Now, the most important talk of the town, Vietnam. Of course, we're all aware that the Chinese government is putting extra efforts to move export production to its neighboring countries, including Vietnam and Cambodia, to make complete use of the comparative advantages on labor cost, business expenses, and the trade agreements that Vietnam has had with the US. Now, Vietnam has signed a free trade agreement with the EU recently, which creates considerable opportunities for the garment and footwear export industries, where all taxes have been reduced to zero. In addition, the textile sector is also expected to benefit from the comprehensive and progressive agreement for Trans-Pacific Partnership. Certain other parameters which favor Vietnam are that the European Union had already warned Cambodia that they will lose its special access owing to its shifting from democratic government, which is favoring Vietnam. Philippines, again, because of shortage of compliant factories, is not that much in competition as compared to Vietnam, because the scale that Vietnam offers is much higher. And coming to the limitation, Vietnam has a higher wage structure and production cost, which makes it a less lucrative option for foreign investment. As I previously told, the minimum wage in Bangladesh is $95, which is almost half of that in Cambodia, and that in Vietnam is close to $150. Now here we have strategies of certain companies which have come up after the US-China trade war to adapt for the tariffs and the potential tariffs that would be implemented in the near future. Now, if I talk case to case, Under Armour has strategized to diversify production to other markets, and it plans to source only 7% of its products from China, down from 18% in 2018. And the major countries benefiting would be Indonesia, Vietnam, Cambodia, Philippines, and Jordan. Similarly, Ralph is also diversifying production to other markets, reducing its dependence on the Chinese markets. Fast retailing is again diversifying production to other markets and is exploring South and Southeast Asian nations to produce clothing, which it is currently exporting from China to about 50 US outlets. When we talk about Crocs, it is cutting down its production in China and has a focus of producing less than 10% of products for the US market by 2020, down from 30% at present. The G3 Apparel Group is again diversifying production to other markets and has only announced by far that the company will be shifting production outside of China. Now, these are only certain examples of how brands and retailers are taking up this tariff war and kind of readjusting their strategies so that they are not losing on the consumer market. Coming down to the outlook, can we say that the China will be affected much in the textiles and apparel sector? I would say the answer would be no, because of certain reasons that we have. Like, while import of basic apparel items can easily be shifted to countries like Vietnam, Cambodia, or Bangladesh, it is difficult to shift the specialized manufacturing high-value items from China to other countries. Now, another factor that we see here is that other Asian countries cannot compete on quality on high-end items of clothing, and neither can they produce in the same quantity or quality as China due to the technological constraints. China, however, has still dominated the US retail market as the largest supplier of new clothing from the beginning of 2016 to late April 2019, as we have seen in the previous slides. And Vietnam, which has considered to be China's main challenger on the cost and quality of garment manufacturing, has contributed only 1/3 of China's level to the US market during the same period. Why, I would say, is that because China has always been regarded as a balanced supplier of sourcing factors, which ranges from cost, reliability, speed to market, compliance, risk. So even if tariff war is going to reduce the price competitiveness of goods made in China, it is not going to shift the overall competitiveness of China as a sourcing base, especially in the short term. Similarly, when we talk about the United States and its effect on the textile and apparel sector, I would say yes, and maybe at the cost of the US consumer. Because if we see at a comprehensive view, US accounts for 17% of China's textile and apparel exports, while China accounts for nearly 50% of the US. This clearly highlights that the US is much more vulnerable to this trade war. 41% of US apparel consumption, 72% of America's footwear consumption, and 84% of travel goods all are made in China. As per secondary sources, over 600 companies and trade associations have already requested Mr. Trump, asking him to remove tariffs and end the trade war, citing a significant negative and long-term impact on American businesses, farmers, families, and the US economy. And irrespective of everything that is happening, China is still expected to remain a critical sourcing destination for US fashion brands and retailers. However, all of these increased tariffs will eventually be paid from the pockets of the US consumer. The last section that we have here is on what the future holds. It'll be interesting to see how the tariffs implied on apparel imports from China and the current tariff list that will be released on October 15th and subsequently in December is going to affect the global apparel supply chain in 2020. But as it is correctly said, that when two elephants fight, it is the grass who suffers. Everyone else is trampled regardless of who wins. So whether US wins the trade war or China wins the trade war, it is the global economy who is suffering. There are certain other important aspects that I would like to point out here, which need to be kept in mind while analyzing all of this scenario. One is that we have not realized that China's middle class is larger than the entire US population. The Chinese are very, very patriotic people, and US goods may face a major boycott by Chinese consumers. There is an upcoming crucial holiday season in the United States, which is of utmost significance to US consumers in terms of apparel shopping. So any kind of levying taxes, duties, tariffs would ultimately impact the Christmas of the US consumer. And the most important part, is the trade war really an output of China taking advantage of WTO norms regarding the upliftment of the quota restrictions? Or it is the risk that US is facing with the rise of China as a global economic power? Nonetheless, there could be significant changes coming in the next quarter, but there's definitely a surety on the fact that all of this cost will be definitely passed on to the consumers. Now, if I talk about China, it has many ways besides tariff to inflict pain on the US economy. It can be done in any kind of non-tariff barriers. So whether it imposes certain inspection regulations, all of it can do to impact the US economy. And democracy makes US more vulnerable to political effects of the trade war than the authoritarian China. And as the Chinese point out, 2 years of US pressure and 11 rounds of negotiations have still failed to change the Chinese bottom line. What we need to understand is that China has long tried to diversify its markets, sources of energy, whether it is about raw materials, as it is continuously working towards self-sufficiency in advanced technology and manufacturing. And whether there is a trade war or there is no trade war, China is already on the path to economic independence from the United States, and it is seeking better relationship with European Union, Russia, and India. So we are yet to see the impact of the tariff lines which will be implemented from 15th of October and in December. But what I can say for now is that definitely in terms of textiles and apparel sector, it is the US economy getting hurt more. I would like to end the webinar on this note. Thank you for your time and patience. We would take on the questions now.